Welcome to episode 16 of the Tax Smart Daily. I'm Brandon Hall, and before we get started, I invite you to join our Tax Smart Facebook group and our Tax Smart newsletter. Links to both of those in the description of this video. Also, subscribe to this YouTube channel. I don't want you to miss any future videos that we drop. Lastly, if anything that I say resonates with you, or if you have any questions, drop a comment in the comment section below this video. I love interacting with the community. It's my oxygen. It means the world to me that you take 15, 20 seconds out of your day to just drop a quick question in there. I will reply, or somebody on my team will reply. Now, today's topic is going to be that ProPublica article that was published, I believe, last week about how the rich are getting around, or how the tax system essentially favors the rich. And I want to talk about it because I think that there's some misleading information in that ProPublica article. So the first thing that they talk about is how the rich how they fund their lifestyle without having to pay income tax. So what's important to understand is that, like, I run this firm, right? My tax firm that where we have 25 employees. We service all sorts of real estate investors all over the place. Well, as that firm adds value, that adds to my balance sheet, my net worth. And I can get loans against my net worth. Now, I can't because I'm too small. But if I'm Jeff Bezos and I've got $100 billion balance sheet, I can certainly get loans against my Amazon stock that I have. So instead of selling $500 million of Amazon stock to go buy my super yacht, I'll get a loan that collateralizes a portion of my Amazon stock to go buy the super yacht. Now, the loan is tax-free. When I receive loan proceeds, I don't pay income tax on those loan proceeds. I still own the Amazon stock because I haven't sold the Amazon stock. So on my 1040, I report no income associated with this sort of transaction. So as long as I don't sell my Amazon stock, I have no income to report. And it's really important to understand that we have an income tax system, not a wealth tax system. And I'll circle back on that in 1 second, but I just want you to know that the ProPublica article seems to be pointing to the fact that these billionaires, the ultra rich, are funding their lifestyle through loans. And that kind of left me scratching my head because it's like, well, when does the shoe drop though? Because at some point, you're going to have to pay the loan back. And perhaps that's when you liquidate the Amazon stock and you pay the income taxes at that point. So that's one thing that I'm not really sure. I'm not rich enough to really know how that strategy works over the long run. But in the short run, I can collateralize my assets just like you can real estate. When you refinance a rental property, like you do a cash out refinance, that's exactly what you're doing. I buy a property for $100,000. I put $50,000 into it. It's now worth $300,000. I get a 70% LTV. I cash out $210,000. That's the loan amount that I received. Those loan proceeds are tax-free to me. So I get $210,000 in my pocket. I still own the asset. I haven't sold the asset, so I don't have to pay any taxes because there's no income tax there. It's just loan proceeds. I can then go take that $210,000 and buy the next property. That's the Burr strategy, right? So it's what everybody's talking about. That's what all the real estate investors are doing. So you're doing this just at a smaller scale for compared to the billionaires of the world. And so your whole purpose there is to add value to real estate. Keep adding the value so that you can cash out more and more and more. So it's kind of the same concept, but at some point the shoe's got to drop. You're going to sell the asset. In our case, we can 1031 exchange it, right? Or watch episode 15 where we're talking about what Biden wants to do with the 1031 exchanges, but we can 1031 exchange it. But billionaires can't 1031 exchange their stocks. That's why I don't really understand when the shoe quite drops on that loan. At some point, you got to pay it back. Perhaps you just refinance it. Maybe, if Amazon stock keeps going up, you can just refinance into a bigger loan that pays off the old loan. I don't really know. But that's one thing that they're doing. The other thing that ProPublica kind of pointed out, which did not sit well with me, not politically, not anything like that, just because it's inaccurate, I think. They said that the billionaires the billionaires like added some incredible amount of wealth. Their companies increased drastically over the past handful of years, and their income tax that they paid was about 3% compared to the wealth that they gained. And that doesn't really sit well with me because, again, we have an income tax system, not a wealth tax system. So whoever is writing the ProPublica articles kind of uninformed, in my opinion, or they're just doing it to stir the pot and really get people jazzed up and shook. But just know that we have an income-based tax system. So just because you go and add $100 million of wealth, if you do that in a way where that value increase is coming because you're adding value to real estate, you're adding value to your business. I mean, if you're not actually earning income, you're building the appreciation, right? You don't pay tax on appreciation until you sell the asset. That's what's going on here. So don't get wigged out that these ultra rich folks are, adding so much wealth but paying so little in tax. Look, they're playing the system that's dealt. We have an income tax-based system, not a wealth tax system. Really important to understand that. And I think that when you go back through that ProPublica article, and I would encourage you to do so, go through it with that lens and think, okay, now this is, it's not, what are they really trying to push out to readers here? Are they uninformed, or are they trying to stir people up? It could be a little bit of both. I'm not really sure, and I'm not going to make a call on that. I just know that those two things stuck out: the getting a loan against my stock that increases, and also, citing the fact that I pay 3%, not me personally, but I as a billionaire pay 3% of my income tax on my increased wealth is kind of an irrelevant fact, because that's not the system that we have here in the United States. If you enjoyed today's video, please leave a comment, let me know. And in the description of this video, there's a whole bunch of links to our various communities that you can join, and following us online. We'd love to have you as part of our larger community. So please follow us, and thanks again for watching this video.